today. The first one is fairly straightforward case. This case is called as a Choc Corp or Chocolate Corporation. The idea of this case is to see how companies get wrong output or management information when they move from one system to the another system, or one business practice to another business practice. In a very competitive market, business evolves over a period of a time. They are not constant. Right? They take their own shape as they move along, reacting to that environment. They have a core strategy with them, but still there are a lot of things which influences their decision. Our chocolate corporation started as a single company, and it started with some kind of idea that taking chocolate actually reduces the stress. That is how some research finding is there, and they are trying to push that as a primary selling point. So they were selling 2.4 million unit and 60% capacity utilization. The remaining 40% capacity is available for them. So what they have done is that they have started, when they were doing only one product, this is the financial position. So they were selling 2.4 million unit and they were making a profit of a 12.2 million rupee value. But after some point of a time, they started introducing 3 more products to use the remaining capacity of 40%. Now, the current profit statement shows that the overall profit has increased. Earlier, they were making 12.2 million. Now they are making 51.81 million, which is great. But what they find is that this particular product, with that they started the business, which constitute nearly 50% of their total volume revenue, is the profit is coming down. From 12.2, the profit has come down to 9.49. And a meeting is called to discuss why this is happening, what is wrong, or what is going wrong in this dark bars case. Sorry, I mentioned 4 products, not 4. We have only 2 more products was introduced. Totally 3 products was there. And what is wrong with the dark bars? So the meeting was called, and marketing manager, management accountant, operations manager, in addition to CEO, 4 of them are meeting. And what they find, the discussion is explained here. One thing which is coming out very clearly in the discussion is that there is no major change in the manufacturing process or distribution practice. They are one and same. What they were doing, they continue to do that one. And the price is also same. And they were wondering, when all these things are same, why profits are coming down? And in between, there is also a concern that one of the competitors, called as a dark lead, is penetrating the market with a 20% less than the product price. That is, they are selling at 40, whereas the dark bars is being sold at 50. And they are worried about what would be the impact of this, the competitor in the marketplace. So the management accountant felt that there is something wrong when you have the same practice which we have been following earlier, and there's no major change in the cost structure, why this profit should go down. So she felt there should be some reason behind that one, and she suggested to go for an activity-based costing. So what is our job is now to do is to prepare the statement, profitability statement, using the activity-based costing for these 3 products, and find out what is the revised value, revised profitability, and then take a decision based on that one. So what she has observed after discussion with the production and marketing people, she listed down these activities. So on the manufacturing side, she identified 7 activities, which include machine operation, material procurement, including freight, material handling, which is basically the internal handling, cost of setup, right? Each time when you're manufacturing, you have to set up the equipment and other things, cleaning and then configuring the equipment, quality control, taste, smoothness and aroma, supervision, product cost, like a mold, shapes and designs. On selling and distribution side, these are the 4 cost drivers, namely discount and offers, commission on sales, distribution expenses, and promotion. We have some data value on that one. Then administrative expenses, 4.5 million required are allocated equally to these 3 products, not 3 products, 3 products. Sorry for the typo. Okay. Taking the role of management accountant, prepare the revised profitability statement as per ABC and a note highlighting the difference between the 2 statements and your recommendation. So that is the requirement of that one. I would say fairly a simple, straightforward exercise. We will quickly do that one. So let me just take few questions before we go for further discussion. Yeah. So anything you want to say before we start doing the working? Yeah. Okay. We know your question is how do you determine the cost of a machine operation? It is not very difficult. You just take the machine, find out what is the cost of the machine, and then find out what is the depreciation cost. Right? So that becomes a important input on that one. Then you identify how much of the space this machine is using. Let's say the machine is using, let's say, 100 square feet of your factory building. Allocate the factory building related depreciation and other expenditure related to that one. Find out what is the annual maintenance cost for this particular repairs and maintenance cost of the machine. You take the machine as a cost object and try to collect all expenses related to the machine. For example, if you have 2 operators operating this machine, 1 per shift, you add the salaries related to that one. So you will have a statement which shows that the depreciation for the machine, power and fuel, factory building costs allocated to that machine, then salary paid to the machine operator, like that, repairs and maintenance, like that, you have all these things. So totally what you get, the annual machine cost, and find out what is the operation, the hours which you are going to run the machine, and take a ratio of these 2, you get the machine hour rate, which is very standard practice in doing this one. I think in one of these exercises, I actually given that how to compute this machine hour rate, but not sure whether I have used it in the exercise or I have given that as a part of a lecture. Is it clear, Vinod? Okay. Okay, let's now proceed further because our second case takes quite a good amount of time. So we now need to find out for these 3 products. Remember, earlier in the current cost system, we have material, labor, manufacturing overhead, selling and distribution overhead, and administrative expenses. These are the only 1, 2, 3, 4, 5 cost item which we have, which is by and large consistent with what we see in the profit and loss. And financial statements are generally prepared like that one. But in an internal requirement might call for a different kind of a structure, and that's what we are going to do. What we are going to do that we are going to use these things. So our activities are like this one. So let's before that we'll just put what is the material cost. There's no difference in the material cost. It is as same as what we see in the past one. So we can use the same thing. There's no change in the material. Only the activity cost is going to change. Machine operation, including labor. There is no separate labor cost because under activity-based cost philosophy, what we say is that we will consider labor as a part of an activity, not separately as a labor cost. So machine operation, including labor, is going to be what we say is 3,000 rupees per machine hour multiplied by how many machine hours are required, right? When you look into that, the input given to us is for every 1,000 unit, you require 1.5 hours, right? But the total volume which you're going to produce is a 2.4 million unit. So we need to find out how much of a total machine hours required. So let's do that one. So we require 2.4 million. This is a 2.4 million. And for every 1,000 units, we require 1.5 hours. Right? So this is a cost. So roughly, if you look into that, we require 2,400 hours of machine hours are required for this particular product. So 2.4 million divided by 1,000 will give you 2,400 machine hours multiplied by 1.5. So this is, 2,400 multiplied by 1.5 would be 3,600 hours multiplied by per hour machine cost is 3,000, and that's going to be our cost. So we need to now divide this by a million. So what we do that, we will convert this as a million so that we can easily do that later. So I've just converted that everything into million so that it's our computation will become easier. Okay. So this is a machine hour for a dark bar. The machine cost related to the dark bars. So let me just copy that for the other two and then make the changes. Here the quantity, what we are producing, let me just copy the units so that we don't need to refer every time. So this is our unit. So we just change that. This is our unit requirement is 1.2. So let me just change to 1.2. And the machine hour requirement is a 1 hour per 1,000. So we can see that here it is a 1 hour per 1,000. And finally, next one, we require only 40.4. 0.4 minutes of 4 lakh. Okay. Divided by 1,000 multiplied by 1. Okay. We got that. So this is sum of these three numbers. Right. Material procurement including freight. So what is our material procurement cost? It says 10% of the material cost, which is straightforward for us. So this multiplied by 0.1. Material handling is stated, this cost is material handling is 1,000 per batch. And how many batches we have? 200 batches, 70 batches, and 40 batches. So 1,000 per batch. So we'll do that one. 1,000 multiplied by the number of batches. The number of batches are given here. So, then cost of setup is given as 4,000 per batch, and we have so many batches are there. So let's do that one. 4,000 multiplied by the batch numbers are given here. Quality control is given as 2 points per unit. So 2.8 multiplied by The quantity is a 2.4. This is in millions. So let's add up. Supervision is given as 5% of the labor cost. So we have the labor cost earlier. This is the labor cost multiplied by million, conversion million, multiplied by 5%. When the product cost is 6 million per product, irrespective of the quantity we produce, it is 6 million. And it's a constant. So we have this cost, we got it. Then we have, let's quickly add up these numbers to get first level cost. Activity cost related to the manufacturing, we got it. Then we have a selling and distribution and administrative cost. Selling cost, these are the three things, four items which are there. This one is simple. What it says at 5% of the revenue. So let's put the revenue number before we go further. Okay, I think I'll just copy this one. Oh, we can't do that. We just need to convert that into millions. Just slightly hidden. Okay. So the discount and offers are 5% of the sales. 0.05. Sorry. This is some of the three products. Okay. Commission and on sales is given as 20% of the revenue, so quite large. And let me just complete. The distribution expense is given as 1 per unit. So have a unit number here. Only thing is that we have to convert it to millions. Divide it. Okay. And promotion and other expenses is a fixed cost, which is 6 million. Let me just add up this two. Okay. These numbers are incorrect. Yes, we need drag. We get the same problem. Okay. Administrative cost is a 4.5 million divided equally for the three products. Therefore, we have a 1 million, 1.5 million. Okay, with this we are through with that computing the values and the activity-based costing. So let us compute what is the total cost. The total cost consists of a few things. One is the material cost plus our activities related to the manufacturing, we had one subheading. So let's add that one. Plus, then we have all these numbers. Okay. So let's compute what is the cost per unit. This is multiplied by because of a million computation. Yeah. And we have a selling price. Price is given here 50, 80, and 100. When compared to that, we can easily selling price per unit. Let's copy that one. So profit per unit. So we have the difference of these two. So when you look into that, this is what we get, 9.71 per unit profit in a dark bar. Dark chocolate, we get 19.26, and here we get dark chocolate, we get only 6 rupee per unit on that one. So let's also find out profit, product level, under ABC, because that is where we started our thing. We have a total sales value minus, we have a total cost. So we have, okay, just to make this number comparable with the other number, let me convert it into millions. I will find out, I think that you have given me some correction. What has happened? Okay, product level cost is the 5 million. Okay, I will just correct that. This is what the correction. Sorry. Okay. So we have a profit as per the under ABC. We are getting, this is a value 24.3 and 24.11 and 3.4. Profit previously, right? Profit under conventional costing. How much we got? So we have the numbers here. This is about 9.49. So we will sum up these three numbers. We have same 51.81, but it is now showing in a different way. So what we say earlier was the same profit of 51.81. So we said that one, this particular product is giving a super profit. That's what our assumption. So the dark chocolate gives you 27.54, followed by, this is not dark chocolate, so some other Yeah. Dark chocolate chips is giving you 27.54, and the beans is giving you 14.78, and 9.49 is dark bars, which is lower than 12.2. But after doing, and the total profit is at 51.81. We are getting the same 51.81, we are getting in a different distribution. We have a 24.3, which is the super. From 12.2, it has gone to 24.3, and under the activity-based costing, and dark chocolate price slightly lower than what we computed, but the surprising is beans, right? We thought that the beans is making a lot of money, but which is not true. It is taking very low cost. And now the competitor is giving a 20% discount, which is now possible for you to meet that. Because you are having enough thing here, and therefore you can consider in giving some discount. Now 20% may not be possible. If it is 20%, it will be now going to be 20% on 50, it will be 40. The price with 10 rupee discount means a 40, and your cost itself is a 39.88, which may not be feasible, but some amount of a price correction which we can think about. But the earlier notion that this particular product is incurring a lower profit or getting lower profit is incorrect. Actually, this product's profitability actually doubled because we have started using the remaining 40% capacity utilization. This particular product is a benefited. Earlier, the full capacity cost is loaded on the dark bars. When the new product started working, the cost is getting reallocated to the new products, and therefore the profitability of the existing product is increased on that one. So that is more of a right picture compared to what you see in the conventional costing system. Okay, Murli has a point here. Unit total cost, labor cost. Under total cost, labor cost is not included. Yes, Murli, we mentioned that under the activity-based costing, you have only two cost items. One is the material cost, and the other one is activity cost. There is no separate line item is called as a labor. Labor is used to perform an activity. If a labor is used for packing, its cost is included as a packing cost. If labor is used for running a machine, its labor cost is included in the machine cost. If the labor is used for quality control, for example, there is a person who is doing the quality control work, his cost is included as a quality control cost. So the activity cost reflected in this one. Yes, Shanaj, labor cost is a part of the activity cost. Okay. So what it gives you is that a reliable number. The first thing what activity-based costing giving you is a reliable number. With this you can work, right? Your decision cannot go wrong. In this particular case, all product happen to be profitable. So as the marketing manager said, why do you need to worry? Because anyway we are getting more profit, we don't need to worry. If you don't need to worry, why we are making a three statements separately? The purpose of making the product-wise statement, profitability statement, if there is any value behind that one, let this number be a correct number. If you say there is no value, so don't prepare these three product-wise statements. So that is the kind of argument one can think about it. Rajkumar could not understand the reason for mission handling not consider with the mission operation cost. It's not mission handling. I don't know whether I made any typo there. It is called as a material handling. So the material handling is included here as a part of the cost. Mission operation cost is included here. Okay. Just give me a minute. I just close my door and come. Sorry. Yeah. Yes, go to that one. To get the drivers, how is this decided? Is it, yeah, I'm just speaking now. I hope this is clear now. Yeah, I just stepped out for a minute. Yeah, to get the drivers, how is it this decided? Is it an internal decision in the company, and would you always use the previous statement to work out the costings? Okay, good question. So how do you decide the drivers? The decision of the drivers, as you mentioned, is choice, is an internal choice. Okay, is there a problem? Audience, a problem? The yes, no is not very clear. Is it audible or not audible? Okay, great. Okay, let me just go back. Fine, fine. Thank you. So the question here is that the point is, how do you decide the drivers, the cost drivers or activity drivers? It's not very difficult. In many cases, we can easily figure it out. What drives a cost, right? So, for example, the cost, before you decide the driver, you need to identify the activity. The first step is activity. So I explained in one of the discussion that we just start talking to the person who is performing this activity or the department head. Ask them to find out, list down what are the activities that they are doing. So that's the starting point. Once we identify the activities, then we identify what are the resources that are required to perform this activity. That's the second step. Then identify the cost of these resources. The cost of the resources could be salary, or it could be a power consumption, or it could be a rent which you are paying for the place, like that. So you try to identify what are the costs which are influencing these resources. Then you have the total activity cost. Then the question is that how do I measure the output of this activity? I am performing an activity. How do I prepare? How do I measure the output? For example, an accountant is a person who is doing accounting function. What is the output of this accounting function? Maybe a voucher, because most of the time he writes a voucher, he processes a voucher, which could be an invoice, which could be sales, which could be anything. Basically, a travel bill, anything. So basically, he's a person who is either collecting the payment or disbursing the payment. So voucher is a core part of his our activity. So then we say that the one which the number of times you do more vouching, the cost will increase. If the increase in the voucher, there will be a more cost associated with that. You may say it is a fixed cost. His salary is a fixed cost. True, its salary is a fixed cost, but you cannot expect him to do, right? Suppose in a normal circumstances, we expect him to do 20 vouchers per day. If the number of vouchers increases from 20 to, let's say, 25, it may not be possible for him to do that one. So you may have to hire an additional resource at that particular point of time. So what we try to do that, in a normal circumstances, how much quantity you can do that one. A small variation is fine. You may stay a little more time and then do that. But in many cases, beyond some point of time, you may refuse to do that one unless you paid him more or hiring an additional resources. Whereas in the case of a mission, it is very obvious, right? You are running the mission for 8 hours, right? The cost is related to 8 hours. So that becomes the output, right? The hours, the mission running hours is an output, and therefore the cost, the more the number of hours you run the mission, the cost is going to increase. So that is where we have to look into that one. Sometimes it may be, in few cases, you may have 2 drivers, then you have to choose which one is more appropriate in that case. So one good thing is that there are enough literature available. Just do the Google search of the industry which you are belonging, and I'm sure that there will be somebody would have done a research and they would have done some kind of cases, and you can easily identify the activities that they are listing. Right. Okay, fine, thank you. Let's go to the next case, where that is more involved one rather than compared to this particular chocolate corporation. Let's go to this power back as a case. So here is an interesting case. I have not given the country name, but obviously you can figure it out which country has this kind of a competitive advantage, particularly on the battery side, which you could have easily figured it out by now. And this has happened in India. In fact, I'm at least the reason behind writing this case is that I was actually familiar with one of the companies which had a major market share in the battery segment in India. Experienced this problem at that one. It's a few years back, not in the recent past. It was at least 10, 12 years back. This company has faced this kind of a problem. So let me just give you a quick background of this company. This company is doing well. Our Power Pack company is the name of the company is not the real one. The Power Pack company is doing well. If you look into the last 10 years data, this company is a pretty healthy company. It started with a 15.7 million profit. It has gone to 52 million as a profit. Over a period of a time, this company profitability has increased. Profit after tax is 11 to 37, 3.5 times more than what it started earlier. On revenue also, the company's sales values have increased from 549. It's by and large same, but what has happened is that some of the reduction in the excise duty, etc., actually helped them to make more money on that one. So there's nothing wrong in this particular company till 2014. But all of a sudden, there is a import, and the volume of import is fairly large, and the price at which they were selling is very low. Somewhere you can find that it is a 60% lower than what you buy on what these people sell the product. For example, if 10 is the price at which this power pack is selling, and there is a 4 is the price at which the batteries are sold in the market. So naturally, what has happened? The volume declined. So the December 2015 quarter volume, the sales is a 42 million compared to 140 million, which they achieved the previous year. Cost of sales is 63 million, and profit is a negative, and after taking into account the interest, the profit is also turned out to be negative. So naturally that everyone got panic, and there is a meeting called, and we have the whole discussion on the meeting. Okay. So it's a very elaborate meeting. The Prasad, who is the CEO of the company, started the meeting saying that this is the first time this is happening, and what's your view? So marketing manager initiated the first argument saying that we could have avoided this if we have reduced the price. That's what it says. And also he said that going by the current trend, we might end up sales with 20 million for the quarter, so which is lower than what they are doing. Currently, they have done 40 million sales. Now they are going to say, in the next quarter, we are going to do 17 million. Said that I actually picked up the product and tested. And he said that there are a few issues, but by and large, it's okay. There's not any issue on that one. In the long run, it might affect the product. But what surprises me is 60% lower than the product retail price. Head, Priya, she also expressed a concern from the employee's angle. Our employees used to get overtime, but now they are worried whether their job will be protected or not. And then it's not like that one. There's only information we have. So one important thing is that marketing manager says our inventory is 300% more than the normal price. Normally we used to have 83 days worth of inventory, but now it works out 340 days worth of inventory we are holding. We are not selling. We are producing, but we are not selling. The finance manager says nearly 70% of the cost is a variable cost, including material. Our fixed cost is only 70 million. By stopping our production, our loss is only 70 million. If we run that, produce, and if they're not able to sell, the loss will be 50 million. So it's strongly suspend the production altogether and meet only the fixed cost. But it's good, it's a short-term decision, we can definitely do that. But what we need to discuss is more about what should be our long-term. Of the competitor company who is now dumping the product. Information, what we get is a very high level information. And what we see is that the volume increased, but the profit declined from 50 to 32%. And we find that they don't pay any taxes, but whereas we pay a lot of taxes. So let's see that number first. Sales is increased from 400 to 500, right? Which is another 125% more. Whereas here we are 500 to 800, sales is increased. So nearly 300 is increasing, 60% increase. Whereas the profit has come down from 50 to 32. There is a drop in the profit. So this is one of the important input which you need to look into that one. So Priya said that, look, it is a bit surprising because when the volume increases by 60%, there should be a more of economics of scale, and therefore the profit should increase. Why the profit is decline? The production manager Nitin said that one, it's possible only when you also cut down the price. Now the question is that can we request the government to consider anti-dumping duty? The finance manager says that answer is yes, theoretically, but we need more data. And marketing manager says that we have a data, and what the data tells us is that they're selling 20% lower price than their market price. But they say that we normally observe these differences in many cases, but 20% is slightly on the higher scale. So the legal head, Nirmal, says that one, let's not bother about it. And I think this is a good idea for us to file an anti-dumping duty request, but we need to substantiate our claim. If we can demonstrate that the company's selling price is below the variable cost, we have a strong case. Therefore, we need to have a cost structure data. So Wilson said that we'll try to create a cost structure. This input of 80% export sales, this is what the company is doing, and 20% below the domestic market price will be helpful for us to work out what is the cost structure of this company. So the idea is that we need to answer a series of questions. We'll come back to this one, but before that, we will now look into this data, what we have, this very high level data. Can we use this data to build a cost structure? Let me go here. So we have this much of a data. This is the data available for us with us. What is that we can do with this data? I will do a report before that. We just have a 3 years data. And what we can do with this data. And we need to create, and the challenge before us is that how do we create the cost structure and tell the variable cost, the price at which they're selling here is lower than the variable cost. Can we do that? Any input from your side? Use the ratios of a power back, okay? What ratios? Okay, I'm going to make few statements and I want you to agree or disagree with these statements. The first statement which I'm going to say is that since the company is reporting a profit, the importer, right, the person who is selling the product here, the competitor, since they are making profit in all the 3 years, we can say that the company is operating above break-even point. Is this statement correct? The company is operating above break-even point. Yes, we know. Okay, good. So all of you agree, right? Good. Okay. Since the company is operating above break-even point, my second statement is that increase in profit is equal to increase in contribution. Am I right? Okay, let me type it out here so that it's clear for you. Since the company is operating above BP, increase in profit is equal to increase in contribution. Right? Okay. Obviously, because once a break-even has happened, fixed cost is covered fully, and whatever the incremental contribution we take, that should be equal to the profit. Now, can we say increase in contribution divided by increase in sales, right, is equal to contribution to sales ratio. Basically, increase in profit or contribution. We are one and same, right? We have a increase in sales. It's a 300, and changes in the profit is 50 to 32. Is probably we may have to use the year 1 and the year 2 data to get the cost structure, and then we'll use that in the year 3 to do that one. So if I go by that one, so let's compute. We'll use the year 2 data. Using the year 1 and year 2, let's find out. So increase in sales is 500 minus 400. Increase in contribution, 50 minus 30. So we have a contribution to sales ratio is 20 by 100, right? Or in percentage term, it is a 20%. Can we say 1 minus C by S is equal to variable cost by sales? Is that okay? Okay. Okay. So let's do 1 minus this 1 is 80%. So now I got the variable cost by sales. Now can I find out? Let me just put that one. My variable cost is now equal to 80%. Here it is equal to 80%. We'll come to the year 3 bit later. Then what is my fixed cost? Now I have a sales, I have a variable cost, I have a profit. My fixed cost, let's put the contribution in between. So contribution should be the difference of these two, 80 and this one. And fixed cost should be the difference of these two, right? So 80 minus 30 should be the fixed cost. And that holds good even for next year. Fixed cost should remain same irrespective of this one. Now let us apply to the third year. Third year, the fixed cost should remain as the same. It cannot go up or down, where by definition fixed cost is the same. And therefore, the contribution should be equal to sum of these two. Sum of these two is the contribution. So the contribution should be sum of these two. Right. So the company, and we got a cost structure. Let's take stock of this one. Using the year one and year two, we got a cost structure, right? And our cost structure says that one, variable cost is 80% and fixed cost is 50%. This is the cost structure we got. Now, what we are trying to do that, we are trying to apply in the normal circumstances in the year three, what should have happened to this company is that the company should have got a profit, which is something different from what they are getting here. And our idea is to now get what should be, is that a chance for us to prove that the company's selling price in this country is lower than the variable cost. The moment we are able to prove that, then there is a very fair chance to convince the government to either levy anti-dumping duty or simply ban the product, saying that you're trying to destabilize my market. Now, we need to now figure it out how to create that one. The information we have is the 50. So that is coming from the previous year. Let's try to work out how this 80, we have two, that's 800 million, the revenue which we have two pieces of information. One is that this company is now selling 80% export and 20% to domestic market. So let's now find out what is the export and the domestic market. So this is 80% of that one. And then balance 20% is the domestic market. One more piece of information we get is that if you go back to the case, what we get, they're selling 20% below the domestic price. The price at which they're selling is at 20% below the domestic price. So let's use that number here. So what should have been, if my sales is 100, normal sales is 100, my domestic sales price is 100, I'm selling in the export market at 80. And this 80 is equal to this one, right? 640. The 640 number which you see is equal to 80. What would have been my correct price? So let me just put this as an export normal price. The export normal price should have been 640 by 80 multiplied by 100. So it should have been 800 plus another 160. 960 should have been the sales if they follow a uniform price. If they are following a discounted price, instead of 960, they are getting only 800, which considers 640 and then 160. Now let us try to find out in the normal course what should have been my variable cost. My variable cost is 80% of this value. So my 640 is the variable cost, right? My contribution should have been in the domestic market is 32 and in the export market should be 160. And together, totally, where the fixed cost cannot be split between the two, so my total revenue should have been 960. My total variable cost should have been 768. My contribution should have been 192. Minus 50. I should have got this much of a profit. 142 should have been my profit, but I ended up in having 32 as a profit because I'm selling 20% lower price, right? This should have been my normal. If I have not discriminated between these two regions, the domestic market and export market, if I charge the same price, I should have the revenue of 960, of which 768 should have been the variable cost. I should have got contribution of 192, and my fixed cost is a 50, and 142 should have been my profit. It should have increased. From 30 to 50, it has increased. From 50, it should have increased to 142. But what has happened is that it ended up in 32, which is lower than this 142. Why this has happened? Because I'm not selling at 800, I'm selling at 640. Now we can prove this 640 is a variable cost. We are selling at the same price. The export price is equal to my variable cost, which is a strong case for the anti-dumping. Because we are selling at variable cost. We are not making any profit from this margin. If this number is a lower, then it would have been much more stronger case, but even with the equal number, we can demonstrate that this company is charging the export or dumping the product in our country at the variable cost or lower than the variable cost. That is a very stronger case for us to argue on that one. Okay, let's go back here and try to answer some of the questions now. Let's see that one. Why the profit of the power back batteries show high volatility though the sales are stable? Obviously, the reason is that the cost variation is there. The excise duty started declining. That is one reason that the value is increasing. We also need to look into that. What are the cost structure on that one? So we may not have the time, but my suggestion is that just cut and paste this in an Excel sheet and find out what is the raw material cost on a yearly basis. You can find that the significant reasons could have been the raw material cost. I just show you for the raw material. We may have to redo this for the other expenses too. This one is raw material to the sales. Sorry, 1 minute. Give me a minute. Let me just. Okay. If you look at that raw material cost as a percentage of sales, it varies from here to here. So the volatility is because of this number. So raw material as a percentage of sales is also varying. Like that, many of the cost items might vary. We can actually break them, other items we can break them into fixed and variable and then figure it out. What is the current break-even sales for this company? So that requires a lot of X. I'll post you the answers for that one. So we have to now find out, I gave some example in my video. So we need to now split each of these total costs into fixed and variable, and then we have to find out how much is the one small thing. We'll just take only this total and then try to do that one. This is. So one way for us to get the break-even point is a very simple. We just run a regression between these two numbers and find out what is the fixed cost and what is the variable cost. So intercept is equal to I need to know. Intercept gives you the fixed cost, and slope gives you the variable cost. We actually have to do item wise. To save time, I'm doing it together, but therefore it is become negative. So it's not acceptable. So what we have to do that we have to take. Let me just do one thing. We have a total expenditure. So total expense less material cost. With material cost, we know that it cannot have a fixed. It has only the variable cost. So the expenses I'm taking. Make one more attempt. If it works, otherwise we have to do it. So intercept is is not acceptable. We have to do that individually. What we have to do that we have to work with this individually and then find out what is the fixed and what is the variable. Once we have that one fixed and variable, we can use the break-even point. We can compute the break-even point. Okay, let's proceed further with the other questions. Examine the risk of the business using the margin of safety, degree of operating leverage, and CVP index. All these things, once we have the break-even point, which you can do that one. Can you provide additional insight on the competitor cost structure? That's what we have done. In fact, in this exercise case, the 4 and 5 are very critical for us. Can you provide additional insight on the competitor cost structure? Yes, we are able to do that one. 80% of the cost is a variable in nature, and 50 million is the fixed cost. Draw as much influences as possible using the competitor cost data and create a cost structure of the firm, which we have done. Advise a power back long-term strategy. The long-term strategy is pretty straightforward here now, in the sense that first thing is that we need to file a case against this company for anti-dumping duty, because they are started selling at a price much lower than the total cost. They are not even charging single thing on the cost. That's number one. Number two is that this company is paying a lot of taxes, whereas they don't seem to be paying much of the taxes. So when the competitor environment is a low tax regime, and if you are pushed into a high tax regime, then you may lose the competitive advantage. We have to go and argue with the government that the entire industry might get collapsed if you don't consider revising the taxes. So that's one more reason, one more argument that companies can make on that one. But in the long run, they need to cut down the cost. So what is the current cost structure? Because we said that variable cost for them is 80%. What is the cost structure for this company? We have to look into that one. So once we are able to get the breakup of this number, the fixed and variable cost, then we can look into that. What is the cost of this variable cost of this one? And we need to bring down. If the variable cost is very high, so it's not acceptable. We need to cut down this cost. What does it mean? How do I control my variable cost? Variable cost increases with the volume. Therefore, you can't play with the volume to control the variable cost. We need to look for the technology, right? We need to find out the technological solution to bring down the variable cost. What kind of equipment I use? Why my power cost is so much? Is it possible for me to reduce? What kind of a material I use? Can I use an alternative material? So these are the things which we need to look into that one. Then we move into the fixed cost. What is my fixed cost? Fixed cost can be controlled either by increasing the volume or outsourcing. The things which are not fully used, we may have to start doing a outsourcing. One thing which the company has to look into that capacity utilization. If the capacity utilization is very low, the fixed cost is not recovered fully, and they may have to go for the full capacity utilization. Finally, the long-term strategy for the company is also need to highlight that the quality aspect. They need to discuss more on in the in the public forum and other material, they do that one. This is what the production manager's argument is very important here. So one second, where is that? He clearly says that yes, it might affect the life of the instrument for which these batteries are used in the long run. So this is the point which we need to highlight, and then convince a customer that they need to look into the quality. Because when you're buying a product, let's say you're buying a wristwatch and you spend about, I'm using Indian rupee, let's assume that you spend about 8,000 rupees, or in the international currency, let's say $100 you spend that one, and you're trying to save, let's say some 10 rupee or 20 rupees for the battery thing, and if it is going to affect your the life of your wristwatch itself, it is a very costly proposal for you. Therefore, we need to educate the customer that when you're buying a battery, we need to also ensure that when you are using it for a costly things, better you check the quality of the battery. And we need to prove that these batteries is a substantial quality on that one. So there are multiple ways in which we need to argue. Internally also we need to be more efficient, and also we need to tell what is the importance of these consumables in high cost products which they are doing that one. Okay. We have not completed this case fully, in a sense that first three questions we have not answered, but I believe that it's not very difficult. What we need to do that, we need to use this data to break that into the two cost structures, right? I think I should have the data ready with me. Let me just search, and then if I have it, I'll just show you the solution. Yeah. So we have the data here. This is what we are trying to do, that one. And we have a variable cost and fixed the final workings are here. Okay, I'll format it correctly and then show you on that one. But the point here is that current sales is given 510 million. That's what we have. Current sales is 510. Oh yeah, 510 is the current sales. The total sales net of excise duty is 510, and we have the data here. Contribution margin, which is the 25% is a contribution margin, and then fixed cost we have 70, which we have broken, and then PBIT, and the break-even point is at 280, and margin of safety is at 1 and 2.21. Yeah, so we have that. I'll come back to this question. The idea is that we can split the cost. Fixed cost is 70, and then the variable cost is 75. This is what, when you do that, the data crunching, we will get that one. And with this, we can get all the data what we are looking for: margin of safety, break-even point, margin of safety, operating risk, everything which we can get. Okay. Let me just take this question. I can see how you worked out the variable cost of the competitors in year 3, 7 or 8. The competitor export is reduced to 640, which is sales of 80%. Domestic is a 160. Should just read sales is a 800 minus variable cost of 768 and contributions of 32 and fixed cost minus fixed cost of 50. So losses 18%, 18 for the competitor. Okay. Let me get back to these numbers once again. So what we are trying to say here is that probably what you are trying to do, that you are trying to split this fixed cost between these two, domestic and export, and then trying to show that one has lost the to the competitor, which we are not doing it here because it may not be possible for us to split the fixed cost into between these two. But if you try to do in a linear fashion, so 960 is my sales and my fixed cost is 50, how much I should attribute to this one, how much I should attribute to this one, we can make an attempt. So 41 is here, and 8 will go here. So still I have a contribution of 32, and I have 8, and I still have a profit of a positive number. Okay, now let me just try to read it one for your question carefully. If the competitor export is reduced to 640, okay, from 800, okay, which is the sales with 80% discount, so the domestic is 160. So 160 is discount. 800 minus 640 is a 160 is a discount. Should this read sales 800 minus variable cost of 768. So variable cost of 768 is not related to 800, it's related to 960. Right. So you can put 768 here. That one, I'm not sure. Let me just try that. 800 and 768. $32 minus 50 is the loss. Okay. So I think that this is what you are trying to say, right? So they have a variable cost of 768, and therefore they got 32 as a contribution, and then they are incurring the loss of things. But remember, they are getting a contribution of 82. They are not getting a contribution of a 32. Right? The contribution is 82, which means that they are getting a contribution of a 32 from here, and they are getting a contribution of a 50 here. So if I have to redo this one, the export and this mark will be there. So this is a 50, and we cannot do this computation. 32 and 50 is equal to 82, and here we know that it is equal to 640, and therefore this should have been 640 plus 128. So 800 is a revenue. It's not working. It's not correct. Yeah. So what we get is the confusion for us is that how do you reconcile 82? Because in the domestic market, they are making a contribution for 32 using these two. In the export market, they should have made a contribution of 160. Normally, if their prices are 800, they should have made 160, but they are not doing that one. What they are doing it only 50 is the contribution they are making, because 82 minus this one. So the total contribution is 82, and therefore they're getting 50, and then 32 is the value. But the substantive part of the question comes to us is that how do I get this 82? 640, 128 is 800 minus 640 minus 128. I'm getting only 32, right? Not very clear. How do I get 82 here? So the only way for us to reconcile is that we need to increase this one to higher level. So, which means that probably they are selling at 690. No, that's not possible because we got this independently because we have a 80-20 ratio here. So, yeah, okay. I think that the issue here is that there's some cross effect is working here. So we got this 800 is the total sales, and 800 is our total sales. We broke that into two components. 640 is the 80% of the 800, and 160 is the 20% of 800. Then what we have done is that the 640 should have been actually 800, not 640, because of the discount of 20%. That's what we derived. And then using these two, we create this as a cost structure. And here it works out very clearly to us. We got 50 is our 192 should have been our contribution. But when you break that contribution, here is a 32. But when you apply this, this is the problem. 640 is the problem for us. Okay. Any idea? There's the cross effect is working here. We have only two pieces of information. That is, this company is selling 80% in the export market, 20% in the domestic market. That's one piece of information. And the price is in the export market is 20% lower than the domestic market. So this is the information which we have. Is that 20% lower here? Yeah, so 20% lower. Yeah, 80% of 800 is a 640 is correct. Maybe marketing workman was incorrect of 80-20 split. Yeah, that's quite possible. But I feel that we may have to do a bit more work to actually split the cost into this ratio. Maybe I will just think about maybe we have to do some kind of a simultaneous equation to solve this kind of a situation to figure it out. Basically, ultimately, what should happen is that all these three numbers should hold good, right? So we can't change this 800, we can't change this 82, we can't change this 32, right? The only thing is that how this 882 is mapped such that we are getting the same 80-20 split and 20% lower than that one. Maybe I think that you can also think about, I will also think about, I think there should be a solution. Is a feasible solution we should get on that one. And that feasible solution should hold good for any number we should do that one. It need not be 80-20, it could be 70-30 also. That's also we should get a solution. Maybe a different solution. But the point here, what we are trying to do is that they are getting 640 and then they are selling at 640. Now you may get slightly differently that argument, but I think that should be a unique solution. We should be able to get that one. So think about it and then let's see that one. Let's not do those kind of assumptions. So let's not, we can always have additional assumption like a grant and other things, we can do that one. But let's not do that one. Let's go with a simple assumption, a simple fact which is given to us, whereas 80-20 export domestic market split and 20% lower than the domestic market price as an export price. So this is the only information available to us. Let's try to reconstruct such that let's see whether we are able to get a solution with this number. Let's figure it out. If I get something, definitely I'll post it in my one of my discussion forum or maybe mail it to all of you. Okay. Thank you. Let me just see how many of you are there here. Oh, I think that I muted mic. Okay. So I will redo that working and then post it with a clear solution for the question A, B, C. 1, 2, 3, we need to show the working. I will do that one. Guys, we are closing the session.